All right, moving on. So this is what I wanted to share with you guys today. I know we went on a tangent just then, but this dude right here, Franklin Templeton, buys coin fund spinoff. This is what I wanted to share with you guys first today, because some of the things that this gentleman here said um absolutely came across like super duper bullish. And look at this, 12 views. So many more people should be tapping into this type of information. But it says here, and shout out to Coinage for this interview, of course. It says Franklin Templeton's new head of Franklin Crypto, Chris Perkins, breaks down why one of the world's largest asset managers is acquiring a crypto fund and what it signals for the future of institutional adoption. So, before we get into listening to some of the clips, I have about 4 clips that this gentleman, Chris Perkins, mentioned. I want to dive into just 2 recent highlights that I had posted over on X that go hand in hand with what Chris Perkins is about to say to you guys. Where I said here in this post, this isn't about hype anymore. And of course, Aqua, if you have any commentary, you're more than welcome to jump in while I'm going through this rabbit hole. I said, we are witnessing the building of the foundation for institutional scale. Institutions will flood into crypto. It's only a matter of time. And this unblocked blockchain regulation is no longer about permission. It's about sequencing. That was posted today on LinkedIn, came out. And they just talk about the recent developments that have happened in the crypto ecosystem this year alone. So just reading some of those highlights to give you a perspective of why I'm saying this in this post, that this is not about hype anymore and that we are witnessing the building of the foundation for institutional scaling of crypto. Here it says, recent CMA rules in the UAE illustrate this progression by formalizing federal licensing, defining permitted and prohibited asset categories, and introducing structured trading and listing frameworks, where regulators are not just expanding access to crypto, they are shaping the market architecture. This signals a shift toward layer infrastructure, where operational and supervisory sophistication becomes central to adoption. Then here it says Dubai's recent move on virtual asset derivatives illustrates this shift as well. It signals that this conversion is moving from who can operate to what kind of market can be built, and how all of this will attract institutional capital. It says this evolution is meaningful because derivative frameworks typically emerge only once regulators are confident that market surveillance, custody, collateral, conduct standards, and operational resilience can support more complex instruments. In that sense, this framework is not merely permissive, it indicates readiness for the next layer of market sophistication. Together, these steps reflect a broader trend in the UAE. That regulatory activation is no longer about proving openness to innovation. The emphasis has shifted to an infrastructure density, deeper product sets, and clear pathways for institutional participation, showing that a market now defines itself by its ability to support a full financial stack rather than by access alone. While regulatory headlines often dominate attention, this one was a crazy announcement. It says a more strategically important signal comes from market infrastructure. Swift has moved from design into the build phase of a blockchain based shared ledger for tokenized deposits, with a minimum viable product expected to support interoperability between banks for 24/7 cross border payments and live transactions targeted in 2026, which is just crazy to see. Because how many times over the years have crypto bros been like, oh, Swift's going to get replaced and Swift's going to use this chain and that chain? But in reality, they were never going to get replaced. They were way too big for that to ever take place. And anybody that argues that case honestly just shows lack of education on the actual understanding of how finance and traditional finance works. And it was never going to get replaced. It was always going to merge with DeFi. And that's exactly what's happening. Now, will Swift adopt certain blockchains? That's up for debate. I'm not here to debate that. I hope that they do to some extent, to some degree. But nonetheless, the fact that it is now providing interoperability with its own viable products to offer interoperability between banks and 24/7 cross-border payments is pretty crazy to see in real time. It says institutional participation is also entering a more advanced phase. And this is where it mentions this Franklin Templeton acquisition. Says Franklin Templeton's acquisition of majority stake in crypto native investment specialist 250 Digital sounds like traditional asset managers are evolving beyond limited exposure products into specialized digital asset capabilities. This shift from access to capability is a clear indicator that the market's next frontier is operational sophistication rather than headline approvals. Last but not least, here's the official announcement right here. So you can see April 1st, 2026, Franklin Templeton, a global investment leader, today announced a plan to acquire 250 Digital, an active cryptocurrency investment management firm led by financial industry veterans Christopher Perkins and Seth Gins of Coin Fund Management. And I said, these are not retail investors chasing altcoins. In case you missed the headline this week via all the bearish news and noise, institutional money is positioning itself to buy the dip. This is a freaking really crazy bullish headline. Of course, there's been no bullish price action considering we're in a risk off environment, but this just goes to show that institutions are about to take investing and adopting crypto very, very freaking serious. Says here Franklin Crypto, which is the new crypto leg now of Franklin Templeton. Franklin Crypto will expand Franklin Templeton's existing suite of crypto and blockchain VC investment offerings and will broaden the firm's digital asset investment management platform. This is an exciting addition for Franklin Templeton, and we're pleased to welcome Chris Seth and the 250 Digital team to our firm, said Jenny Johnson, CEO of Franklin Templeton. Together, their investment talent and differentiated strategies strengthen our capabilities in digital assets and positioning us among a small group of global asset managers with dedicated institutional grade crypto investment management teams, enhancing our ability to serve clients worldwide. Crypto's institutional moment has arrived, and Franklin Crypto will help our global clients navigate this complex and rapidly evolving asset class by delivering expertise, knowledge, and digital asset products that meet their sophisticated investment needs, said Perkins. So let's listen after this massive announcement that we got this past week. Let's listen to Chris Perkins and kind of what he has to say about this announcement in this Coinage interview that he was on just the other day. So first, we're going to play at about 2 minutes and 3 seconds. Listen to what this gentleman has to say, and then Aqua, I want to have your opinion on this as we go through these talk tracks.
It's a really, really interesting time right now, as you said. This is the institutional era, and so saw you talking about all the challenges right now on macro. Despite these near-term challenges, this industry is maturing so fast, and for many institutions, they have risk now, not for being in the markets. They have risk for not having a crypto strategy. And so our job is to leverage, the deep native expertise that we have to really help our clients on their journey with just scalable institutional products. I can't be happier to be part when the deal closes of the Franklin team. We're bringing across our liquid research analysts, our traders. It's going to be awesome. We just got off the phone with the team, and everyone's incredibly pumped up, as you can imagine.
So take into consideration from a retail perspective what this dude just said, right? That it would actually be more of a risk for institutions right now not to have a crypto strategy, and how he just got off the phone with the Franklin Templeton team and everybody's pumped up. Y'all, look at the market. Look at the market right now. The market is effed right now.
Discount, bro.
And you got a dude who's working behind the scenes with institutions talking about they're pumped up. That should motivate the shit out of you guys to start focusing on utility, locking in with projects that are building, locking in with projects that have compliance and privacy baked in, because you know that these are all things that these institutions are going to need in order to adopt these digital assets. And again, not financial advice. I know what I'm doing.
Yeah. Yeah. And if you guys are excited, then I'm super excited because you guys are excited.
So that was the first thing that I just came across to me is, wow, the fact that he said that considering the market environment that we're in. And he even said this temporary environment that we're in, right? He mentioned the risky environment that we're in right now and said, we're on the phone and everybody's pumped up.
Yeah, bro. That's all I need to hear, to be honest with you. If you guys are all pumped, I'm pumped. I've been pumped, but the fact that you guys are pumped behind closed doors on where this is all going is just, yeah, verifies why I'm pumped, you know?
Next, he talks about how crypto adoption will accelerate significantly. Take a second and listen.
Able to do is to deliver those enterprise ready, robustly risk managed compliant solutions that ultimately allows us to scale. This is right now, this is a very small industry. It's between a $2 and a $3 trillion industry, crypto. I think that's going to accelerate materially and exponentially in the coming years as we tokenize the $127 trillion equity market, right? How are we going to pay for those on the weekends with stable coins? And you're going to see this massive convergence between equities, fixed income, crypto. It's going to blend all together. The solutions that our clients are going to demand are going to be completely blended as well. And so this gives us the opportunity to really lean in and be a leading active manager for all those institutional clients around the globe. And the other thing is, like, crypto is 100% global from day one. It's the true global asset class. And we're going to be able to leverage that global footprint to deliver those products for our clients. I can't wait.
Bro, 127 trillion, he just said.
Yeah. I honestly think, and the numbers and the statistics show, there was this document that I read. Now, it only touched on the statistics from, I believe the jurisdiction was Switzerland, which is obviously, of course, one of the most crypto native jurisdictions on the face of this planet. And the numbers, bro, were completely decimated from beginning of the year 2025 compared to active retail participation now. And it was just comparing retail participation and interest and how it's literally hit an all-time low. And then it versed it against institutional participation and interest. And institutional participation and interest is literally right now at an all-time high, where every sophisticated institutional investor, asset manager, family office, hedge fund has a dedicated team to figuring out how to embed crypto into its core infrastructure, versus retail traders have capitulated, bro. Most retail traders that don't have a firm understanding that we're just here off the speculative hype and to get rich quick mindset have completely capitulated. And the ones who are left are people like yourselves listening into this call likely right now that have an actual understanding of where this technology is headed and the utility behind it and how eventually it will merge with TradFi and we will see these numbers that this dude is talking about, which is trillions. And I think that when that happens, we really truly as retail traders have to understand that we are never, I repeat, never, ever, ever going to get the opportunity to dollar cost average into the crypto ecosystem below $2.5 trillion ever again when these institutional floodgates come in. Like, if that has not clicked, it needs to click right now, because when these markets go 5, 7, $10 trillion, which eventually over time will happen. It's not going to be an overnight thing, flip of the switch, bullcrap that everybody made you believe. It will gradually get there. But even if we went to, let's just say, $10 trillion again, and look at the last two massive bear market pullbacks that we've experienced, one 2021 to 2022, the market lost $2.3 trillion. From October till now, the market has lost again $2.2 to $2.3 trillion. So if we go to $10 trillion market cap and we lose another $2 trillion, that the pullback is not going to be, it's going to go from 10 trillion back down to 8 trillion or 7 trillion. It's never coming back down to $2 trillion.
Never, bro. Never. Never. This is a once in a lifetime window of opportunity. For real, bro.
So great note on that, Mark, the number that he just threw out there. All right, next. I have two more clips from this and then we'll roll over to Canton. 4 minutes and 48 seconds.
You mentioned Clarity Act. Clarity Act, I think, is going to get done. And yes, we're navigating the final issues around yield, which kind of are ridiculous if you ask me. It's going to get sorted. And then as we approach midterms, I do think there's going to be sufficient political pressure to get this thing done. That, in my mind, is going to unleash institutional animal spirits, if there are such a thing. Obviously, retail animal spirits are a little bit different, but that really that pushes this reputational risk.
Hey, yo, did he just say unlock institutional animal spirits, bro?
Yes, bro. Yes, bro.
Let's run that
back, bro. Run that shit back, bro.
In Clarity Act. Clarity Act, I think, is going to get done. And yes, we're navigating the final issues around yield, which kind of are ridiculous if you ask me. It's going to get sorted. And then as we approach midterms, I do think there's going to be sufficient political pressure to get this thing done. That, in my mind, is going to unleash institutional animal spirits, if there are such a thing. Obviously, retail animal spirits are a little bit different, but that really that pushes this reputational risk over the finish line. There's no more, like, that's it. Now we have codified, enshrined laws, which is going to be very, very beneficial. And it's going to accelerate institutional adoption. What does that mean? Honestly, the line between crypto and TradFi is going to go away. I almost think of it akin to back when I was in futures and we went from pit trading to electronic trading. And overnight, for example, Bunds migrated from like Life to Eurex overnight. That was it. You're going to see the same thing happen with tokenization. And when I think about tokenization, it's not only just tokenizing real world assets, equities, bonds, but it's tokenizing technology. And those are the crypto native assets that we're seeing. You're going to see true 24/7 markets. How can you be a fiduciary in this space if you're not running and operating 24/7 markets? That's what the crypto discipline brings. We've been doing that for years in the crypto native space. That is a very transferable skill as 24/7 markets take hold. And so from a product perspective, what are people looking for? They're looking for blended portfolio.
That was a phenomenal talk track, which just goes back to what I said about the whole Swift thing and like these intermediaries and traditional financial players. This concept of them being replaced is so outdated. Instead, there's going to be a blend. There's going to be, I don't agree with him that it's going to be like an overnight flip of the switch thing. It's going to happen gradually. But when it does happen, it's going to feel like it's sudden. But in reality, behind the scenes, it was just something that was building week after week after week after week that eventually leads to this feeling of it being a flip of a switch. And when that happens, there is not like, man, just all it takes is for you to understand how much money there is in the world and how little the crypto ecosystem is compared to all that money.
Yeah. I feel like what he said too aligns with what Marshall Hayner just said at that GAC 2026, saying we're about to see the institutional bull run, right? Which we've never seen before. So the fact that he's saying very similar talk track, that's aligned with that. And there's many others, man, I'm excited for the rest of this year to play out. And then even, going into 2027, I feel like we're about to see some fireworks, especially if this Clarity Act gets passed. Especially.
Yep. And on top of that, now you've built the digital skills, bro, to build a bigger cash cushion so that way you can allocate more capital into these discounted prices. Last clip that I have from this gentleman here. Again, shout out to Coinage for this interview. I always want to give credit where credit's due. He just reiterates this notion of how you cannot risk not having crypto exposure. And so again, coming from a gentleman who just, signed a deal with Franklin Templeton, I feel like this is a very big wake-up call to any, nervous retail investor right now listening in. Now is also our moment to position ourselves, not financial advice, of course, assess your own personal risk properly, understand tokenomics, make sure that you're investing in projects that hopefully have longevity in this space. But now is an opportune moment to just really make sure that you're embedding yourself in the right communities with the right education and the right information so that way you can stay competitive in this ever evolving landscape, right? So listen to what he says here about how it's very risky to not have crypto exposure.
Look, if you're trying to trade this market short term, I can't tell you how to do it. It's very, very volatile. But when you step back and you look at the amazing things that are happening from a fundamental perspective, the de-risking, the regulatory de-risking around the globe, and the fact that every institution I know is trying to figure out how to get into this space, I think it's a very, very interesting, and you can't ignore this asset class. You have to have a strategy.
Yeah, and certainly, obviously,
he said every
institution.
I'm glad you took the words out of my mouth. Every institution he knows is trying to figure out how to build a strategy to get into this space.
That's so wild, bro. That is extremely bullish right there, bro.
You know, and the crazier part is realizing that that hasn't happened yet.